Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Chuck Fuller, portfolio manager at Nasdaq Dorsey Wright, to discuss movement in asset class rankings with international equities and commodities continuing to stay strong. Chuck, it's great to see you as always. Welcome back to Trade Talks. And we're seeing U.S. equities are just not keeping up with other areas of the asset classes, moving back down to number 4.
Yeah, that's right. So, it's been at number 4 before this year. It kind of moved back to number 3, recently. Now it's dropped back to number 4. Interestingly, it's not necessarily because of weakness, or at least absolute weakness. In U.S. equities, of course, they've been up, about 6% or so over the last month. More it has to do with, like you said, continuing strength in international equities and commodities, which they just performed better over the last month than U.S. equities, and kind of pushed U.S. equities down on a relative strength basis. That being said, we're still seeing some positive developments out of U.S. equities. If we look at the percentage of S&P 500 stocks in a positive trend, those are now back above the 50% level. They had kind of dropped below that, with the whole banking crisis last month. And typically, risks decrease when we see this indicator above 50. Usually all the bad things happen in the market when this indicator is below 50. So that's good to see it come back. And, we have some short-term indicators that, I think we mentioned last month we're kind of oversold. We're due to bounce. We've kind of obviously seen that bounce. And some of those indicators have moved back up. And if we see it turn down from higher levels with these things, which I would say right now we're kind of at neutral to high levels on most of these, but if we see kind of a move down in those, given that we're at the number 4 spot, in the asset class rankings, that kind of brings up a window of opportunity for bears. So it's something to look out for.
Chuck, it's interesting. Technology started the year to rank at number 9. It's now currently in number 2, but you still see value dominating the top of your style and cap rankings.
Yeah, that's exactly right. So, it's at number 2. We've seen incredible strength out of it. Just haven't seen quite enough action across the growth spectrum to really see growth overtake value in our style cap rankings. But yeah, the move in technology has just been unbelievable. Obviously, if you look at the how IndexX has done this year, it's through the roof. And this kind of what we call a laggard rally is what you typically see after a long-term equity bottom. And when I say laggard rally, what I mean is that the stocks that weren't doing well before, so last year, like technology being one of the worst performers, now they are doing well. And if you go back in time, look at bottoms like in 2009 or 2003, you tend to see significant moves of those laggards off the bottoms, which hopefully that's what we're seeing now, and it'll be a sign of good things to come.
And what about an update on fixed income?
Yeah, so fixed income, it's mostly been range bound in terms of yields. If we look at the 10-year, it's kind of been, between 3.3% and 3.5% over the last month. Good news is that bond volatility has come way down. I think we mentioned last time that, we were seeing bond volatility that we hadn't seen since 2008, and that's all because of the banking crisis with, Silicon Valley Bank and Signature Bank. Obviously, that has come way down as the market has kind of said, okay, this maybe isn't as big a deal as what we thought. And yeah, when you look at it, bonds are up, 3.3% this year, and we're roughly, a little over, 1 quarter in. That's a great return for bonds, and obviously much better than last year. And really where we're seeing strength, so far, at least in our rankings, are things like, high yield, and things like municipals and various, asset classes like that.
And finally, commodities posting a 10% return.
Yeah, commodities had an incredible month this past month. Oil, that there was all the news with Saudi Arabia kind of cutting production, and really all OPEC cutting production. And, oil was up about 22% over the last month. But even looking at other commodities, so things that are, are a little bit more obscure, like orange juice, sugar, coffee, cocoa, and even silver, they all had double-digit returns for the month. So definitely a great, set of returns for commodities. And we also saw them move back to the number 2 position in Dolly, kind of going from number 3 to number 2. It's not all roses in the commodity space. We still saw natural gas fall double digits for the month and is now down over 50% year to date. So it's you kind of have to still be in the right areas within commodities, which right now have been things like precious metals.
All right. Appreciate the insight as always, Chuck. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.